So, hello, it's Paul Green with another one of our Focus On panels where we bring together people that I believe are experts in their field. I guess we'll find out as we talk about whatever we talk about today. We were expecting another person who might join us. He's having some technical problems tuning into the matrix, so we may be joined by Rob shortly. We'll see how we go. So, before the idea of these is just to discuss a relevant topic. Hopefully, anybody tuning in live or listen, here he is. Let's just welcome Mr. Harris. Mr. Harris, we're live, so don't swear or anything. We've just kicked off, Rob. So thanks for working.
Okay.
Thanks for working out how to get on it. So
I did just about work on. I just about did, yeah.
I'm just letting people know what this is all about, and in a minute you'll get a chance to introduce yourself. So as I said, if you're tuning into this live or on a replay, then please do put any comments on whatever platform you're listening or watching on, because we will be able to bring them up into the conversation, so we can answer any questions or make any or respond to any comments that you may have. So there you go. So before we talk about all things finance, which is obviously a very sort of like broad sweep topic, but we've got a few things to have a look at that hopefully you find useful. We'll just go around the room and see who these lovely people are. So Wendy, who are you? What do you do?
Good morning, Wendy from Bean Counters. We're a multi-award winning outsourced accounts and payroll solution for SMEs, and we focus only on the Xero ecosystem.
Excellent. And James Blacklaw, I can't even speak now. James Blacklaw, who are you and what do you do?
Yeah, morning, Paul. Morning, anyone watching. My name is James Blacklaw. I run a commercial finance brokerage called JB Commercial Finance, and I specialise in helping business owners and property developers find the most appropriate finance for their requirements, and been in the industry 20 odd years now.
And you've got a few awards as well?
Yeah, one or two, mate. One or two. Don't like to talk, but yeah, one or two.
Excellent. And Rob Harris, do you have any awards, Rob?
Oh, only ones I give myself, Paul. Yeah. I pat myself on the back sometimes. Absolutely.
Tell us a little bit about you and what you do and how you contribute to the world.
Well, I've had 50 very odd years in the financial world as a financial advisor, but I'm now a financial educator, and so I have a money awareness course that helps you understand how to invest your money in these very difficult climates.
Excellent. So I know you were sort of like last in, but I'm going to come to you because you're a dab hand at this sort of thing. So what's going on in the world, Rob? How do you see things? What are your observations, and what are some things that people out there should be taking care of financially, would you say? I know that's quite a broad sweeping statement, but let's see what you've got to offer us this morning.
I could say almost anything under that banner, couldn't I, Paul?
You could.
I could indeed. Yeah. But no, I mean, let's be fairly serious. Things are very complex indeed, aren't they? One of the biggest problems we've got at the moment is that different kinds of investment assets are not behaving as they should. So a quick example would, of course, be during the short Liz Truss period of time. Both the fixed interest market, I'll explain it in a minute, but both the fixed interest market and shares or equities both fell together. That's not supposed to happen. In the energy marketplace, we have something called negative correlation, which means that really when equities go up, fixed interest will probably go down. When fixed interest goes up, equities will go down. That just hasn't happened. A lot of other assets are not behaving themselves. I call it like having a recalcitrant teenager. You think you understand your child, and it grows up, and then it begins to do all kinds of weird things that you just don't understand.
So a bit like your children. Sounds a bit like your children then, James, from what you said earlier with them breaking your laptop.
Right.
Pretty much, yeah.
So what do you think's causing this then, Rob? Why is the finance world misbehaving?
Well, I think really what we need to say, Paul, is that we have been mistreating the financial world for an awful lot of years. We've been printing money, haven't we? It's called quantitative easing because it sounds posh, but it's just the same thing, really, And then we've forced interest rates down, haven't we? So we have pandered to our personal needs and not obeyed what the economy should be telling us to do. Now the day of reckoning, I'm afraid, is arriving very quickly, and we're having to see interest rates rise. We're having to see inflation rising, and these things are out of control now, frankly. So my personal intuition and feel after half a century in the marketplace is to actually expect inflation to probably rise to about 15% actually before it settles back on a permanent basis, and also to see interest rates between 5 to 7%.
Okay.
So people listening, if you agree with that, if you go, other people will say otherwise, of course, you know, but if you go on that basis, that should make you stop and wonder, where is my money at the moment? Is it in the right kind of asset to cope with these kind of conditions?
Yeah.
So get involved with your IFA. Get involved with where your money is. Begin to understand. If you don't take control, then your finances will be scattered. It's as simple as that. So take interest in it, everybody, please. Yeah.
Half a century, Rob. You must have started in this business when you were 12.
That's most kind.
So James, is it a bit mad out there, as Rob suggests, and what sort of are you seeing from your financial view of the world?
Yeah, I mean, I agree with an awful lot of what Rob said there with regard to certainly the manipulation of the Bank of England base rate over the last 14 years. Is something we've never seen before, keeping it at virtually zero. And I think it's been highly irresponsible of the Bank of England not to have implemented small increases over certainly the last sort of pre-COVID, say between 2015 and 20, 0.25% increases along the way. So all of a sudden you're at 2.5%, and people haven't necessarily noticed it because it's happened over a 5-year period, rather than now where base rate is at a historically still perfectly reasonable 3%, and yet it feels like the end of the world for so many people. Will it go much higher? I personally don't believe it'll go anywhere near as high as 7%. I think we can anticipate an increase to 4% in the next 12 months. Whether it goes higher than that or not, I think will depend on the political status of play, because we'll be approaching the next sort of general election period. And I think the last thing the Tories want to do is be the party who costs 500,000 people their homes because they couldn't afford their mortgage payments. But people have been playing politics with the base rate for too long. So that's my little spiel about that. With regard to generally speaking, yes, it's a worrying time for an awful lot of people, especially those on fixed incomes. If you're on a fixed income and your pay review says you're going to get a 3% increase, and yet inflation is running at 11.5%, then you're worse off before you've actually got out of bed for work in the morning. And that's a very worrying position to be in, especially if you can't see job prospects increasing. If you're at a fixed salary and you're not intending on applying for a promotion, or you don't see much of a future for your industry, it is difficult. And unfortunately, the only advice I can really give people is to look at what they can influence, which is tightening their belt. So if they've got wealth, then talk to their financial advisor. If they've got a mortgage who's up for renewal, talk to a broker, and then look at their own individual bills and see what they can do to cut things down, because it's going to be uncertain for a lot of individuals. For businesses, though, there are opportunities, as there always are, as we enter, as we're likely to enter a recession. We've talked beforehand, it's not official, but there's always opportunities. So as usual, the bold will succeed. But yeah, it's a worrying time for people, and it's time to put your gum shield in maybe and bite down and fight through for the next year or two.
I knew you'd have to bring a boxing reference in some point.
I'd say, the referee's about to stop the fight, but not quite yet. We're not quite at that stage.
Yeah, for those that don't know, James has got quite a penchant for the boxing community. He's got a few boxing gloves in that room somewhere. So I don't tend to mess with him normally, but as we're virtually, he can't touch me. So Wendy, what are you seeing with your clients in the current climate? Are you seeing any changes or any difference in terms of how they're responding financially?
I think clients are quite shocked by it all, to be honest. Some people saw this coming, and to other people it's been an awful surprise. I think people like Rob and James, they've probably seen this coming for some years. I mean, it's it wasn't sustainable keeping the interest rates. What was it, 0.1% at one point? That's not sustainable, is it, in the long term? And as you say, they've been printing money over many years, but I think people got quite comfortable with the way it was, and it's been quite a shock to the system to actually see things changing. I've had a client that's gone to see somebody regarding going on a CVA to help their business through. People have taken these loans, these bounce back loans, these CBILS loans, and now they're going to struggle to pay them. It's it's a difficult time for people.
Yeah. I think I saw some stats earlier, James. You might be able to back me up in terms of bounce back loans. Is it around about 30% or 34% or something are struggling to repay or are defaulting on the bounce back loans?
Well, that was Starling Bank have come out and said that they expect it to be around about 30. I think it's 34, but I can't remember. But there was an article which I shared on LinkedIn this morning with regard to the fraud and defaults, and it's damning. But Wendy's absolutely right. People who have for 5 minutes spent time in this industry can see this coming a million miles away. And I while I appreciate and benefited from some of the support that was given, anyone could see that this was going to be a problem, the bounce back loan. And the article that I read this morning, which was in one of the mainstream newspapers, said that this ultimately will end up being likely the most problematic, as in cost wise, of all the lockdown measures that were taken by the government, the bounce back loan scheme, which probably says it all, really, to be perfectly honest. That's bearing in mind that's a scheme that actually is a repayable scheme rather than furlough, which was giving money, and grants, which was giving money. This one should have been paid back, but it might end up being the most expensive of the lot.
Yeah. So, Rob, is the light at the end of the tunnel then? Will things normalise and get back to something that's more manageable and less, if you like, threatening to businesses and individuals alike out there?
Yeah, that's a good question, Paul. But just before I jump on that one, can I say that there's a light right now, not at the end of the tunnel, but right now.
Okay.
In a sense, James was an interesting comment, James, about the bold. Was it the bold always win? Did you say, James?
What always wins? Sorry, Rob.
I heard you say that the bold always win, or something like that.
Oh, the bold, yes, yeah, yeah, absolutely. Well, when in a recession, those who are prepared to be brave, they benefit, don't they? We always see businesses do well during the recession.
Okay. Fine. So let me just talk about now for a second, then, because students of the Money Awareness course make their own decisions as to where they're going to invest their money. I just printed off a graph, Paul, of 1 month's performance, looking down a number of the funds in which they're invested, and some of them are in gold. They made a return of 11.8% in 1 month. That's to yesterday's date. Even in UK equities, a fund achieving 9.64, then 5.84, and so I could go on. So in the volatility and rapid changes within the marketplace caused by all the kerfuffle that's been going on, there are opportunities to make profit even in the short term. Yeah. So don't let's be negative. Let's be bold, as James said, and go for it. There are opportunities there.
Yeah, I think it's about being smart, isn't it? And as you say, using your financial advisor to look at where money is invested and change. Don't just sort of leave it in one place. If you think that you're going to lose out, try and sort of keep ahead of the game and invest wisely and shift things about as you see fit, given the correct financial advice at the end of the day. So, James, you touched on the sort of like mortgage marketplace. I know some companies have been withdrawing mortgage offers or the variety of different mortgages that are available. So what's going on there, do you think?
Well, I mean, anything I say obviously can't be given as advice because I'm not a regulated mortgage broker. But we are seeing, having spoke to brokers, rates stabilising quite a bit on the residential mortgage front. So there was this panic when base was first put up to, was it 2.25%, and then in all the predictions it was going to go to 6%. So all the fixed rates for residential mortgages were starting with 5% and sometimes higher. And as we've alluded to, they went from 2 point something to 5 point something very, very quickly, which was very scary. we're seeing an element of stabilisation now as the long-term forecasts aren't quite so aggressive. So the residential mortgage rates seem to be dipping back down in the fours, the medium fours, and on the buy-to-let basis, you can now borrow in the high fours. So while that's higher than it was 6 months ago, it's certainly better than it was looking 6 weeks ago. On the commercial side, while again customers make their own decisions, I'm talking to people about maybe preferring to take base rate linked loans rather than fixing their interest rates, because the fixes are very, very high. That even the high street banks are offering 5-year fixes at 8.5%, 9%, which feels ridiculously high when you can take a base rate linked loan of 3% and then still fix probably in 2 years' time if the need comes. So yeah, the mortgage market is calming down, but I know that a lot of transactions are still falling through, having speaking to solicitors on a daily basis. And I know that estate agents are a little bit more panicky than they were maybe 6 months ago, when all they do is put something up and they get 50 inquiries. Now they're having to actually earn their money. So that can't be a bad thing.
Yeah. So we recently had an autumn statement from the Chancellor. So I know it's a topic that you were interested in sort of exploring, Wendy. So what are the sort of like highlights that you see from that? And is the government doing enough to sort of support people through these troubled times?
Watching the autumn statement at the time, it seemed that they were trying to help people on extremely low incomes or on benefits, and they were sort of increasing those quite well. They weren't helping the middle guy quite so much, and they certainly weren't helping the director of a limited company. Director dividends tax-free allowance reduces from £2,000 to £1,000 next year, and it was £500 the year after. Now, it wasn't so many years ago that tax-free allowance was £5,000, so they really seem to be clobbering the directors, your small director-only businesses, because they rely on that little bit of help there. Also, all of the stuff that the Liz Truss government did in cancelling the increase in corporation tax, that's all been reversed. So that, if your income is above a certain threshold, you're paying 25% in corporation tax. Couple that with the reduction in dividends, it might be that you'll find that it's actually more cost effective for them to go back to running as a sole trader. Tax-wise. So that is something for people to take a look at, because until their profit threshold gets above a certain level, it is actually more cost effective. You might find more people dropping out and doing that. And another interesting thing, the tax allowances are now frozen till 2028. So effectively, as we get pay rises, hopefully we get pay rises, it actually means we'll end up paying more in tax. So it makes us slightly poorer in that regard. The other one that was interesting for me was that they've encouraged everybody to go electric on their vehicles because it's zero tax. In 2025, they snuck this in. Road tax will apply to electric vehicles. Yeah. So all of those, because they're losing too much in road tax now, because everyone's going, yeah, great, we'll get an electric vehicle. So electric vehicles aren't going to be that cost effective if you think about it, because all your utility bills are going up. So electricity is a lot more expensive, whereas you could charge your car for £2 a night. I very much doubt that that's the case now, with the huge increases we've had in electricity bills. And that then coupled with the fact that all these people that have got these lovely electric cars, we don't know what it is yet, how much it's going to be, but they're going to have to pay road tax in 2025. So I think they've done some things to help, but I think they've done a lot which doesn't help the small business owner, to be honest.
Yeah. What are your thoughts on that, James? Do you have any observations?
Well, I mean, it's scandalous to suggest the government might somehow be going back on their, word about electric cars and I mean, it's absolutely predictable. As soon as they, we lose some money there, what gives with one hand takes with the other. And so, yeah, with regard to that, I do feel that, and I might be wrong about this, but it's something I've felt the whole way through the lockdown measures as well, that this government aren't especially small business friendly. I think a lot of us have maintained that and been very frustrated about that, because whatever your political leanings are, you would generally expect a Conservative government to encourage enterprise and a Conservative government to actually be on the side of the business owner. That doesn't seem to be the case, certainly not for the SME community. I'm sure if you're a billionaire business owner, they're quite nice and friendly to you. But for us guys on the coalface, the dividend tax decrease, I think, is a real kick in the teeth, to be perfectly honest. And I 100% agree with Wendy that I personally woke up after that and I thought, well, why am I trading as a director of a limited company and paying X for my accounts every year, or whatever it may be, when I'm struggling now beyond the liability aspect to see a real benefit? So I do think there'll be an awful lot more people switch back to being sole traders over the upcoming years, unless there's a good reason to be a limited company. I mean, I'm in an industry where actually you probably want to be a limited company because of the nature of what we do. But if you're a one-man band, I can't see any benefits. I believe there's also some changes around the IR35 legislation as well, which I think will actually be beneficial for labourers, etc. I'm not hugely au fait with it, but it does strike me as a little bit of a kick in the teeth for the SME community, who I guess will be a majority of the people watching this particular broadcast.
Yeah. It's as you know, I publish the Business Bulletin magazine, and we have a regular columnist in that, Roger, who tries to keep things current. And I think he had to rewrite his column about 3 times in the space of about 4 weeks just to keep it current with what the government had said 4 weeks ago and what it was saying now. So I think we're going to have to sort of print the finance column in sort of a digital liquid ink or something that disappears once something has changed. So Rob, it sounds like generally that there are still opportunities out there for individuals and businesses. People just need to adapt and sort of like think smarter, don't they?
Yeah, certainly have to think differently, I think, certainly. I mean, obviously, I talked about the various funds that students have used with gains, but we have to bear in mind that funds fall as well as rise. If they don't fall as well as rise, then there isn't a good opportunity to buy into them, is there? So that's a normal kind of thing that we have to live with. But interestingly, thinking of the budget and all the rest of it, see, look, I rather agree with Liz Truss, actually, except she handled it awfully badly. I do believe that going for growth is the right thing to do. And I worry that in the recent budget situation, that it may be becoming too tight. If we lessen the amount of money in our pockets, then we can't go out and buy so many things. And then, of course, unemployment increases. And then with unemployment increasing, there's less tax being paid. Less tax being paid means that the economy hasn't got the money to pay its public servants and live. So it's a very tight little ball. And I don't know at what point they'll take the risk of going for growth again, because that's the key to succeeding. So when we start to go for growth, Paul, that's when we can see light at the end of the tunnel. So
you're starting the Bring Back Liz Truss campaign now, Rob, officially?
No, but I'll tell you a kind of quick story which I've reflected on, because several years ago I had an IFA practice with several IFAs working with me, all the rest of it, but the business was kind of drifting downwards a bit. I had lots of equity in my house, didn't I? What did I want to do? I wrote down Rob's big bold plan on a piece of paper, and I showed my wife at the time, and sometime after that she left me.
Is that a positive or negative, Rob? I'm not quite sure.
Well, of course, I was the risk taker. She was the one that had to hold on to everything that she got, you see. So the problem there actually was that I borrowed billions of pounds against the equity of the property, invested it in my business to turn the business around. That was going for growth, isn't it? And it's also borrowing on kind of unfunded figures, really, at the end of the day. But it worked. You see, the growth happened in my business. Later, I sort of retired, did I? Heck, I sort of retired and sold my business for a nice big fat sum. So going for growth, borrowing money worked for me. Why wouldn't it work for us then? Well,
I think they tried to do too much too soon, didn't they? I think they just gave the markets the jitters, because instead of doing one thing, they did loads of things all in one go. If they'd have done one at a time and filtered them through a bit more slowly, I think it would have been better. But it's all these tax rises are going to scrap them all. We're going to reverse everything, and I think they just did too much in one go. And the markets just thought, "Oh no, this isn't going to work."
I think something that's interesting, and we forget about it now, but when Truss and Kwarteng's budget was first announced, actually the next day it was received quite positively.
Yeah, it was.
And it's strange now, we see it as a disaster and stuff, but they were flying the next day. It was received, this is a growth, this is a proper conservative budget. It's a growth budget. And it was only when the markets reacted and it was then seen as a complete disaster. So don't get me wrong, I'm not saying I want it back, but I have an element of sympathy with their position, because they tried to do exactly what you were just speaking about, Rob, which I think ultimately we do need. The other point I make about borrowing, as someone who obviously deals with this every single day, borrowing money is great, but you've got to be able to pay it back. And I'm not sure at this moment this country's in a position to pay any money back. And that's maybe the difference between your situation, where you did pay it back. I mean, bloody hell, the national debt now is high. It's nosebleed territory, and ultimately interest payments. I can't remember the exact figure they make up of income, but it's a significant proportion of GDP is now spent effectively on interest debt repayments, and that's not good.
That is a slippery slope, I guess, for anybody, isn't it? But I think the message we've sort of said on these before is that the small business world are quite a tough old bunch anyway, and that are quite resilient, and a lot of businesses have adapted over the last sort of few years with COVID and other things coming their way, and I think building on what you said, Rob, I think you've still got to have that mindset of growing your business. Continuing to invest if you can, or work smarter and focus, your efforts, because there are still opportunities out there. There are businesses, as history will tell us, that thrive in recessions, albeit we're not technically in one as yet, and survive in, any economic climate. I think it's just having that adaptability and that focus on what you actually want to achieve for your business, and achieve it regardless of what's out there, and just be smarter about it, I guess.
Well, there's businesses that started because of COVID. And she got made redundant, and she took her redundancy money and decided to start a business, and she started her business during COVID, and she's doing rather well. So I think there are, it's not all doom and gloom. There are people that you just have to, I think, look at what's happening and adapt, and that the people that don't adapt, and as Rob was saying, you've got to and move your money to where it needs to be. And if you haven't got money to move, just adapt to what's going on. Said, cut down your bills, look at what can you streamline. So there are ways of getting through that. And I think a positive mindset goes a long way to that. So it's not all doom and gloom. It's never all doom and gloom. I mean, we've been through recessions before. I mean, look what happened in 2008, and we came through it. Who would have thought 4 years ago that we were, somebody has said, oh, there's going to be a pandemic and the whole country will be shut down for 2 years and a lot of businesses won't be able to trade. We'd have thought, you're talking rubbish. But it happened, and yet here we still are.
I think that there is a tendency, in the press to sort of focus on all the worst possible outcomes and all the worst possible things, And there's an element of reality in what inflation is and whether we're going to be in a recession and what interest rates are, etc., etc. That is a reality. But again, if you spend most of your time focusing on that, then you are going to go down a sort of doom and gloom path. And there's actually no need to, as history has shown us. Businesses can and will get through this. And I think you've got to keep the focus on what's achievable and a positive outlook for you as an individual or a business. So changing topic, James, you were sort of suggesting talking about recent FX scams. Did you want to say a little bit more about that?
Yeah, a little bit. And I think the reason I think it's worth bringing up is that at a time when you're talking to your independent financial advisor, he might well be advising you that the value of your pension has gone down. He might well be advising the value of your investments has gone down. And the temptation, of course, is in those circumstances is to potentially look at alternatives. And as we've seen in the last few years, there's been a rise in things like FX and cryptocurrency. But I don't know if anyone's seen this, but the second largest crypto exchange in the world, FTX, went down last month. And the founder, a guy called Sam Bankman-Fried, it looks like he may end up in federal court about it in America. But the scam, potential scam, is looked at being approximately $30 billion US. It's a ridiculous amount. And I think it's a timely reminder, which is why I was bringing up now, that if you are going to look outside regulated investment activity or property, then really, really do your due diligence and really, really don't invest in something which seems too good to be true, and don't invest money which you're not prepared to potentially lose, or if you aren't prepared to lose it, make sure it's not actually going to cost you your livelihood. Because I've seen an awful lot of people come to me saying they lost 50,000 quid in investing in Bitcoin when it was on the way up and things like that. And Bitcoin is an incredibly stable cryptocurrency as far as cryptocurrency is concerned. But FTX's downfall, and there's been a lot of publications over the last few weeks about the background to it. It's a very complicated thing, but it seems to be little more than an unsophisticated scam. And the fact that people they had stadiums named after it, they had some of the very, very large sports stars promoting it. And the fact that everyone fell for this, and the guy himself, SBF, he doesn't fool me for 1 second. He doesn't look very reputable. So just be prepared. Be careful what you do with your money. And I think now, at a time when your returns on traditional investments may be rocky, it's not time to actually speculate in that sort of way. So that's why I wanted to mention it today.
Yeah, I think there's a danger that when times are hard, that you're looking for the next get rich quick scheme or something like that. And I think the general rule of thumb, James, is if it is too good to be true, then I recently a couple of years ago got sort of drawn into something that was referred to me by someone that I thought was legitimate. So because I trusted them, I went with it, did my due diligence post investing a little bit of money in it, and realized that it was basically a very elaborate Ponzi scheme. And I think I'm a reasonable enough, quite bright chap, but because the person who bought it to me, I thought they'd done all their due diligence, so it must be legit. I hadn't done my own. So be careful of, I guess, false prophets out there. Trying to sort of sell you eventually is snake oil. Do you see that, Robert? Has there been a sort of resurgence in people offering these sort of like get rich quick schemes or these cryptocurrencies or anything like that? So I think you tend to stay away from cryptocurrency totally, don't you?
I do indeed, yeah. But I would quite agree with you, Paul. You are really quite a reasonable, quite bright chap. Yeah. I think we can all put hands up for that. You certainly are, sir.
You can come again, Rob.
Okay.
Come again.
Come again. I'm just a creep, really, aren't I? But there we go. Anyway, but no, I mean, seriously, I'm away from all unregulated investments, actually, really, at the end of the day. And one of the reasons for that is that what I can see is that you can make plenty of money within regulated investments. So why take the risk of going unregulated? So the kind of returns I spoke about this morning, 11.8% in 1 month and 9.64% in 1 month. I mean, what more do you want? You know, I mean, and I think the goal of financial planning, if I can suggest this, the goal of financial planning should be for your contentment. It shouldn't be for your ever increasing wealth, so that your wealth becomes a god that you're seeking after and worshipping almost, because that will just become emptiness in your life in time. So make the goal of your financial planning your material and physical and inner being, a kind of well-being, rather than just endless wealth. There's no point in it. So stay with regulated funds. Don't go out there and do daft things like Bitcoin. I'm sorry, but it is daft, actually, really, at the end of the day. There's plenty of money to be made where there's a solid foundation upon which your decisions can actually be made. There's no foundation upon which you can make a Bitcoin plan at all. There's just not, I mean, you wouldn't build a house without a foundation, would you?
Yeah, I think
Bitcoin has no foundation, and cryptocurrencies and all the rest of it. There's no foundation beneath them.
Yeah, it seems in recent months people are just sort of second guessing what Elon Musk is going to do in the cryptocurrency world, and trying to emulate or follow that. You know, because if he buys or sells a load of stuff, then that has a massive influence on what the value of that particular cryptocurrency is. So it's quite it just shows how volatile it is. You know, based on what one person does in terms of a massive transaction or something. So I'm conscious of time. We usually sort of like keep these to about 40 minutes. I know there's a couple of things we were going to talk about, but I don't want to labour on anything. Is there anything else that you'd like to cover, or just sort of make as a final point before we close this down?
No, I can
cover quite a lot today.
Yeah.
Don't watch the news. That's your key takeaway.
Don't watch the news.
Watch the news.
All right, let me just put a little thoughtful thing in at the end, if I may. The world is a troubling place in many ways. There is the Ukraine war, there's the threat of China and the USA over Taiwan, has the COVID, all these negative things that we can actually be actually looking at, really. And you might be inclined to think, gosh, is it the end of the world? Well, I'm going to make a suggestion to you, because of climate change particularly, and what we are failing to do about that is not the end of the world, but it might be the world of the end that we are living in, unless we change things pretty rapidly. So if we are living in the world of the end, that's going to affect money and finance, all kinds of things. But let's turn that around and let's let it not be the end of the world. But please take notice of that. People with investments, pensions, do write to your fund managers, as I have done, and tell them that you expect them to be retrenching their investments into the shares of companies which are doing positive things to impact the world and save it. Don't let your money burn up the world around you, please. Merry Christmas.
That took a turn, didn't it? Crikey.
I think sermon ends, but I think the SMEs contribute. I don't know how many there are now. 5 million SMEs, something like that. I think it's over 5 million now, particularly over recent years. I think there's been more small businesses have set up, which is great. But I think small businesses are a significant influence on UK PLC, because they still represent around about 50% of the GDP, and as we've discussed on these things before, they are potentially in a better position to adapt, to adjust, to pivot, which was the word over the last few years, and still have our businesses grow and be a contribution to the economy as a whole. I think sometimes you can, based on what Rob says, sometimes you can sit back and think, oh, the government's got to sort this out, or the big corporates have got to sort this out. Whereas, with small businesses representing 50% or so of UK PLC's GDP, if people take action, it can make a difference, and it can influence, the economy if we're all doing our little bit. There's a little story that I remember from way back when. And you know, there'd been this is on a beach, and there'd been a storm, and all these starfish were, you know, stranded on the beach, you know, away from the sea. And there's like a little girl, sort of like every now and again, picking up a starfish and throwing it back in the sea so it can survive. And a bloke comes over to her and sort of says, you know, what are you doing that for? It doesn't make any difference. So she picks up another starfish and throws it in the sea and said it made a difference to that one. So it's like, you know, it's that, you know, where are your starfishes? And, you know, we're not going to solve the whole thing, but, you know, is there a starfish that you know, metaphorically speaking, that you can throw back in the sea that's going to help you, your family, your business, or whatever? So I'll leave you with that. So yes, thanks for your contribution today, guys. And yeah, we'll be here next week with another scintillating episode of our Focus On panel. So thank you very much.
Yep.
Thank you.
Thanks.